Hey there, traders. It is Monday, April 7, 2025. Very interesting day. The range in just this one day from high to low was over 400 S&P points. That doesn't happen very often. Of course, we're going to dig into the smaller time frame to look at the entire day in a more granular setting. I find it interesting that while price did go all the way up near the top of Friday's candle, they closed right below the low and the close of Friday. So very interesting things going on. We talked about, I believe it was Friday when we talked about support down in this area, coinciding with the high they made back in January of 2022 and an important retracement, the low from October of 2022 to the high that they made a couple months ago in February. This is half of that. 50% is important, so it shouldn't be a surprise that they found a bottom down there. And other important levels in the 50-period moving average below that. So when you look at the daily chart now and see where they went, this is where bulls came out and pushed price up. Of course, we had some warring news items that the market liked and the market didn't like. I think it was 280 points, maybe more than that, up in about 6 or 7 minutes, and then maybe another 20 minutes later that came back down. We'll talk about that shortly. This was definitely a day to just be on the sidelines and watch. Way too risky to put money at risk. That was the tone of the game plan that was sent out before the opening bell. You can see the time. That was this morning. And I talked about these levels would probably need a lot of room to work, perhaps more room than some traders would be comfortable with. I'm talking about like wiggle room, not relying on just small, precise base hits that we typically do when the market is acting normal. Said that I was going to sit out and be a spectator until the dust settles. And I also talked about this zone here because in the pre-market, they were down there. I was doing some work. It was early in the morning, sometime around 6 a.m. or so. They got below 487. They were in this area between 487 and 484.50. You can see that those were two of the levels that were on the board today. And in the pre-market, I actually jumped on board and pulled more than a handful of points on a couple contracts. It was probably risky, but it worked out pretty well, quicker than I expected, actually. And then when price came back down into this area later, this was long-term support. I said that in this first sentence here. That's a good way to look at what happened down there because they took off from that area right after the opening bell and never came back to it for the rest of the day. Anyway, you can read through this if you'd like. And now we'll look at the levels in relation to price action throughout the day. So typically, these levels might be 15 points apart here. We have them like 50 points apart. And in many cases, these levels were respected. But if you're playing by the rules, you really shouldn't have been trading today. And I debated. Here's the zone down here, 487 to 484, pretty big zone. I debated just putting this down as a zone, which means I would have made these levels dashed, because in the big picture, this really is the zone. I didn't do that, though. I just mentioned that in the game plan, that this was the area earlier in the pre-market session that price bounced from. So when they came back into it later, they were down here after 15 minutes. So going short at any of these levels would have been suicide. And even if you did just blindly trade these levels, gone short, been out of the money, you would have hit that max loss limit very fast. Same thing to the next one, every single level, perhaps 5 or 6 times before you finally had some type of support. That would not have been very smart, but once things settled in, you can see how these levels were important, although these are huge swings. They're out of the money quite a lot on some of these other trades. I mean, I'm not going to go through all these. I'm not sure really how to code this today. In hindsight, I probably shouldn't have had so many levels on the board, but I just wanted to see how price would react to it. I had no intention of trading today, other than a couple, which I guess I'll show them to you because they were good trades, but they were also risky. But back to what I was saying, I considered just having this zone down here, and then there was a zone above the high that they got. They never got there. And I considered just having those levels, like 4 or 5 levels, really spread apart and just leave everything out in the middle. I honestly considered doing that. I just thought it looked kind of interesting not to identify any areas of probable support or resistance between like 485 or so and up to whatever it was, 526 and above. That was the area. I did not do that, and while it is interesting to see how price reacted off these levels, they really weren't tradable because of the inherent risk. And perhaps you guys can tell me if anyone tried to trade these levels today, or if you came up with your own levels and they were similar, what you would have done. There were a couple opportunities. I'm going to talk about one right here when we get to the live recording of the day, that this area here, market was telling you that price was probably going to get above the high of this break up candle. They did that eventually. And I consider taking this trade, but at this point in the day, I had already bagged over 50 points. I saw no need to get into the market again and risk anything else. We'll talk about this pattern and what it did to the market and how you could have read this in real time if you had a clue of what this bullish chart pattern was telling you. So this is a recording of that pre-market trade I mentioned. It was probably around 6:30 a.m., and I'd been in the trade for a few minutes, still on a 60-minute chart, doing some analysis in the SPY, and where the futures were was in that zone that I had identified in the SPY. So they were bouncing from that area, and you can see I was long 2 and got 1 off when they filled half of the position there, or got sold half of that. So the remaining contractors kept pulling the profit objective down until I got out of the trade and pocketed, I think it was like 34 points or so, pretty quickly before the market opened. I'll just let this run a couple seconds. That was pretty much it. And that was all done before the opening bell. And then for the rest of the day, you can see the market had just opened. It's 9:30. I'll let this thing run. It didn't have any intentions of trading at all. Just wanted to see what price would do. So I'm kind of zooming in and out, looking at other things. And I was away from my computer for a while. I think they went off screen. Wasn't there when that big spike happened. I think it was around 10, right after 10 o'clock or so. But when they started settling in and they came back down and they were fighting 500 again, I made a decision to take a trade. It was a risk, I understand, because as we saw already on that 1-minute chart, there was no real clue how price was going to react at the levels the first time. And in a lot of cases, the reaction happened the second time it came around on the other side. Had connectivity issues. I don't know if you can see that SPY is kind of lagging behind here. But when things kind of settled in and they were coming up, I'm going to pause this when this order gets filled just so you can see right the second time or so they came back up into 500. I went short, and I'll explain it when the order is entered. There. Okay. So quickly out of the money a little bit, short 2 contracts, but just seeing what the market is doing, my anticipation was that they were going to fall down, possibly even go quite a bit lower and get below this 493. But I just wanted to get a relatively small handful of points. Ended up getting over 20. It's like 20. Oh, that was pretty fast, but that's the whole point. I was going to show you that the trade happened pretty fast. They came down to 20 and a half. So if I can pause it. There we go. That's it. I mean, I'm glad I got out there, and this trade lasted like less than 2 minutes, I believe. And that was it. So there was an extra 20 points. So total, it was over 50 points. Unusual day, and I kind of wish I hadn't taken the risk, although I'm happy to have the points and the dollars. But that's not really a good example of what really anybody should have done, because my recommendation early in the morning was avoid getting involved in the market. Don't put money at risk. I want to point out something else later on. Came back from lunch, and I was getting ready to just shut this down. It was around 1 o'clock or so. I saw something developing. So, was it 1? Yeah, it was like right after 1. Here we go. So, let me back up. So, I saw this. So, I'm looking at the market and see this. I know this is just a 1-minute chart, but if you are watching the lessons in the course that is available now, you might recognize something going on here. There's a breakup candle. They're coming down to the bottom of this, and this is just a 1-minute chart, but volume is pretty high. A lot of things are going on. They've established that this area where they could not get below is pretty important. This is a consolidation that would likely send price higher above the high of this breakup candle. So I hovered my mouse right here. See the line? 495.90. Thinking to myself, if I were willing to put more money at risk, I wasn't. But if I were, I would take a long trade right here. The equivalent in the E-minis was over here somewhere. And I just held that for, 10 minutes or so just to see what price did to that area. And sure enough, that was the bottom. And they continued higher. And maybe 10 minutes later, you could have pulled 50 points. I mean, I didn't, obviously, but that's just a little lesson there. Let me go back to it. Of that type of bull consolidation working out pretty well. And by the way, where would you be wrong on this? This is just a 1-minute chart. So if you had a 1-minute candles closing below the low of this breakup candle, something else probably going on. And who knows, they could have dropped like a rock and not bounced off of this level the way they were hovering over it. So that was the risk. You would have jumped out preferably close to your entry point if that scenario played out. But in this case, it played out the way it was supposed to and went higher. On the tracking log, if we were playing by the rules, you would have avoided getting involved. So that's my notes. The prudent trader would not have touched the market today. And I recognize that there could have been some of you who did. So if you want to provide some feedback on anything you made or lost, not that anyone wants to brag about losses, but there were a lot of levels. And it was really kind of a big picture bounce off of this 487 area. And then all this was just black swan stuff you don't really see. Kind of comes out of nowhere. And even if you traded these levels on their way up, as the bulls just kind of blasted through each level, and took a 20-point loss on every single one, and say you had like a 100-point loss, 100 points worth of fumbles, well, that would look like this, and that's very painful. However, just to point out that that rate of return based on giving like a month's worth of points back is still better overall this year than most places, I would argue. But I hope you'll agree that the note here and the sentiment for the day is accurate. You really should not have messed around with the market. Then here are my trades. 2 trades that I took that you already saw totaled 55.12, 55.12 before commissions. And once again, I don't advocate what I did, but I had my reasons. It really wasn't based on the levels and the rules. It was based on my observation of what the market was doing in real time. These were basically just opportunistic trades, and I just took advantage of what was placed in front of me at the time. The dust will settle eventually. I'll probably be a little more conservative on the levels tomorrow. We certainly don't need a ton. Let's find the best ones with the assumption that the volatility is not over yet. Thank you for watching. I'd like to hear from you if you did trade today, if you're willing to share some information, be good feedback, or if the levels that you came up with, and I'm talking to those who are taking the course and are probably starting to see where these levels come from. If that's you and you had some levels, I'm just curious if your levels matched my levels. Maybe this is not the best day for comparison because we typically don't have such massive moves, but once the dust settles and the market starts acting normal again, whatever that looks like, I think you'll probably start seeing some patterns developing and start to get a better understanding of how to read the market. At least I hope so. I'll be back tomorrow with another recap. Thanks again and have a great day.